So, Ben, thank you so much for joining me today. For the audience watching, Ben owns a company out of Central Kentucky called Essentialino. Hope I'm saying that right. Ben, welcome to the show. Tell me a little bit about yourself and about your business for the viewers.
Thanks, Daniel. So I've been Reno-Weber. I'm a serial entrepreneur. The company is Essential Innovations. And what we do is help organizations who are hiring to take advantage of all of the tax credits and other resources that are available to them to help them fill their talent needs.
Fantastic. So, you're helping small business owners take advantage of tax credits and other incentives that exist in the marketplace. I know that when you and I first met, you'd mentioned how large companies know about these things, and there's a gap in the marketplace that you saw the opportunity to help small businesses who tend to not know about these opportunities. What would you say are some of the biggest incentives small business owners are legally entitled to right now at a high level that they just have no idea exist?
So most of the incentives exist in order to help people hire from what we call undertapped talent pools. And that includes anyone who comes from a group that has been harder to get into work, but who we as a country feel like is really important to get to work. So that's anyone who has been on food stamps, long-term unemployment, veterans, folks who are coming out of the justice system, foster youth. If you add up all the things just for one of the credits, which is the work opportunity tax credit, it's between 10 and 15% of the U.S. workforce. In last year, companies with more than 5,000 employees pulled down $3.4 billion, whereas fewer than 1% of small businesses are even registered.
That's an incredible number, and just goes to show the opportunity and the gap that you're striving to fill for
Yeah.
these small businesses. And
Yeah.
you mentioned, so when we talk about money for these small businesses, especially around these like hiring certain individuals, how much money are you talking about? Hundreds, thousands, tens of thousands for to hire? Like, how does that work?
Yeah, it depends on what category people fall in. And what's interesting is that many of these resources exist and are stackable depending on geography and industry. So, but just take the work opportunity tax credit, which is the most basic and usually our starting point. Those can range from between $2,400 to $9,600. So it's real money. Particularly, it's real money if you can make it so that it's very little effort. So what we find often is that people are in fact hiring folks from these different talent pools. They're just not taking advantage of the tax credits because the paperwork's too much trouble for a small HR team.
Interesting. As a fractional CFO, I see business owners leaving money and opportunities on the table constantly. Why, in your world, with these tax incentives or tax credits, like, why does this happen? Like, why are these companies just missing this opportunity?
So I think there are two pieces to this. One is the technical. So it is complicated paperwork. You have to register with the state. You then have to collect this data, which is not that hard. And then you have to submit it in a certain format, none of which is undoable. But the most common quote we hear from HR professionals is, I've been in HR for X number of years. I have known about these credits for X minus one number of years. Every time I go to figure it out, it's just complicated enough that I don't do it. So that's one piece. The second piece, and I think the actual much bigger piece, is fear. Right? This is a government compliance thing. And if you screw it up, theoretically, there could be bad consequences. Now, is that really realistic? No, but it does stop people from moving forward.
It's interesting you said fear is one of the hindrances for compliance. So, with your business, you help these businesses, your clients, identify opportunities. And then, from what you're saying, it sounds like you help them, you keep it simple for them. And then you're helping them with the compliance component as well. Is that?
Absolutely. If once you sign up with us, which takes about an hour, you will not spend an hour over the course of the next year talking to us. You will sign up, you will add these pieces of paper to your hiring process, and then you will once a quarter send us a payroll export, and we will manage all of the other pieces, which includes, so we start with the work opportunity tax credit, which some payroll companies do. They usually overcharge for it and do a terrible job of delivering, but they do it. But then we will also look at what's relevant to you. So if you're a small manufacturer in Maysville, Kentucky, and you hire somebody who is under the age of 24 and hasn't been in school or work for the last 3 months, you're eligible for youth credits through the WIOA framework. all of these letters and ridiculousness, you shouldn't have to think about, right? What we do is say, okay, great. You're in this industry, in this geography, you hired this person. And if you get a credit for them, great. We will take care of it for you. Now, there is a second piece of this, which is to me, I think one of the really interesting opportunities, which is helping employers to get comfortable with being intentional about hiring. So, for example, we're working with a landscaping company and they're like, dude, I don't care what kind of record somebody has as long as it is not violent. I'm happy to have people who will show up to work every day. And if I could de risk that hiring process by having the first 30 to 50% of their payroll covered, man, that makes me more. That's great because I already have a huge turnover. It's better to have somebody who's got a support network of a nonprofit making sure that they get there, that they have the tools that they need. That's actually net add for me.
That's Yeah, that makes perfect sense. And so it sounds like the programs that exist or opportunities are complex in that there's, it's based like you said, there's industry specifics, there's location specifics, and then there's the specifics around the individual employees that might be hired to be able to take advantage of programs. But your company makes it simple and easy for your clients by figuring out what all that is and then actually doing the heavy work, I guess,
Yep.
for them.
That's it.
That's incredible. Know that, yeah, programs change constantly and, tax laws change constantly. What do you say? What about how do you address a company when, let's say you're talking to an HR manager? I know I would imagine that that would be maybe a gatekeeper when talking to a potential client that they might be in the way. It's like, how do you move past that versus like you're not taking their job, you don't do payroll, you're not, how do you interact with the HR team or the HR manager? Kind of what does that relationship look like?
Yeah, well, first off, we usually start with the CFO or the CEO because they're the ones that see the financial benefit. Like, great, got it. And then for HR, it is about de-risking for them. How much added work are you putting on my plate? What do I have to do now? Because HR teams, particularly small HR teams, are always overwhelmed. So for them, it's being able to say, no, look, here's the deal. You sign up, you have to add these pieces of paper to your hiring process, which is actually like, that's annoying and takes a little bit of work. Not that annoying, but it is annoying. And then once a quarter, you send as a payroll export and that's it. And once they have some confidence that that's all you're doing, then they're like, okay, I'm not going to try and be a blocker. But that's actually the point at which once that process is going, you can start to say, okay, great. Are there other pieces that you are struggling with? Is it sourcing talent? Is it supporting them in those first 30 days? Now here's a funny thing that we also do for the individual employees. Often, particularly in these frontline high turnover industries, your workforce is still eligible for a lot of government benefits. The government wants you to stay employed. They want you to be in a stable household. And so you can continue to get food stamps if you make below a certain income and you have, usually if you have kids, you can continue to be on Medicaid up to certain income levels rather than go without insurance. Stabilizing those things for an employer's workforce is meaningful to them. So that's the second piece of what we really try to work on.
So when I hear you say for CEOs and CFOs like myself, it's attractive from a financial perspective, but then for HR managers, it's attractive to work with you from a de-risking perspective. You're not adding a bunch of complexity to their life. Anything, you're making it a little bit easier, especially when it comes to the ability to hire, maybe candidates that they in the past maybe would have passed on for a variety of reasons because now there's an incentive and actually lightens the load, if you will, during the onboarding process in certain ways. Is
Yeah.
that accurate?
And how often does HR get to generate revenue? I mean, HR is
It's been there.
always a cost center. And if you can
Yeah.
say, hey, look, we did these things and now there's $50,000 going straight to the bottom line that wasn't there before, we get to make them superheroes.
Yeah, that's really cool. So to clarify for those who still maybe don't understand what we're talking about, what does essentially, actually do? Explain this like I'm a contractor running a $3 million per year plumbing business. When
Perfect.
you were talking to me, what does that look like?
Yeah. So for the plumber, plumbing business or a contracting business, the folks who are usually eligible for these things, not always, high turnover, lower skill positions. So on a construction site, it's your tool runners. Now, they're often folks that you hope to get in, validate that they're good workers, and upskill to be a plumber or an electrician or someone. Or if you're healthcare, we do a lot with aging skilled nursing, aging care facilities. Like the folks who go in and actually do the caregiving, what it looks like is this. You call us, we say, great, love to talk to you. Tell us about your workforce. They say, we've got this, we hire this many people in a year. Our smallest client is a manufacturer. They had one person eligible for these tax credits. They got $2,400. But because the onboarding process takes 1 hour, we basically have to tell you how to put the hiring forms into our secure database. And then you, once a quarter, send a payroll export where we say, listen, here's all the folks that qualified. Are they still employed by you? And how much did you pay them in the last quarter? We submit that to the state. State sends us a certification for this amount of tax credits. We hand it to the CFO. CFO's like, woohoo, free money. And that's it.
Pretty straightforward, simple, sounds like.
It is very straightforward and simple. And then I think the piece that's interesting is, okay, what else from our menu of what we call non-traditional benefits is interesting? Is it medical debt forgiveness? We work a lot with the partner who can help employees who have incurred medical debt at a nonprofit hospital to get that forgiven. That's interesting. It's benefits eligibility. There's lots of other things that we can do, but the key piece, super easy, free money for hiring you already want to do.
That makes sense. Yeah, so your company does a lot more than just this one thing, but that's kind of the starting place because it sounds like a no-brainer place to
Yep.
start.
And the principle is always the same. There are resources that exist to support people getting and staying in jobs. Those resources sit behind these fiery walls of paperwork, and AI is good at paperwork.
How fast does a business that decides to utilize a program like this see the actual financial benefits? Say they hire somebody that qualifies for this program you're talking about. How soon do they see that money or the tax incentive? Is it when they do
So
taxes?
it's with your taxes. So that's when you actually get or don't have to pay that amount. So this is not a deduction, it's a credit. So that's worth a lot more. There is a lag that comes from when you hire that person to they work a certain number of hours. I'll take work opportunity tax credit as one example. They have to hit 120 hours before anything starts to accrue. So you can't just hire and get a tax credit and fire. And then you keep tracking hours till it goes up to the maximum, or depending on which category. So that can be anything from that $2,400 up to the $9,600. So that accrues over time. And then, that's how it works. We don't do anything up front. So we only get paid when we certify the tax credit.
Gotcha. You're investing some time and effort in the front to hopefully the following year to see some real benefits for them and your business as well.
Yeah. And we're happy to do that, on the chance that it does work. We've had a couple of clients that, we've been working with them for a year, and turns out they have not hired a single person who qualifies. And that's okay. Because it takes so little effort on anyone's part to test. The second they do, it's worth it. And then there's these other benefits that they get from doing that with us that are helpful to them.
So are there any upfront fees associated with your business?
We do have an implementation fee that if you onboard with us and then don't tell us that you're not hiring anybody within 30 days, we'll charge you $100. As long as you say, hey, listen, I'm not hiring, that's fine. But that's the only thing. And the reason that we do that is it turns out that we had one client who they were collecting all the paperwork. They were doing everything. They just didn't send it to us. So they left thousands of dollars on the table. And we were like, why didn't you do it? And they're like, it just never bubbled to the top of our to-do list. We're like, okay, well, now we know having to pay $100 invoice is enough of a motivation that people always send.
It's easier just send the paperwork.
I don't want to have to tell someone why it cost us $100.
Yeah. Huh. Interesting. What is an example of one of the biggest wins for a small business that your company's been able to make, the impact they've made from this system?
Oh, it is definitely the connection to folks who want to work, have proven that they will come in every day, but don't necessarily know where to go. So we have a cleaning company that we work with, and they've got scattered sites. And so to get to that site, you have to know, okay, great. Well, that's actually, the job is not where they hired me. I actually need to go to the client site. And as soon as we helped them to clarify within their hiring, oh, I'm hiring for this client site, that, the throughput there of successful candidates went way up. And also, because we were sourcing these candidates from a nonprofit for whom most of their clients were eligible, their eligibility rate went up. So it was great. It was win win win. They got better candidates, better fit candidates, got these additional tax credits, and everybody was happy.
Are there any specific industries or size of company where if you were talking to them for the owner for the first time, it's kind of a no-brainer, you're almost certain, like, they're missing out on opportunities?
Cleaning, landscaping, roofing, now they do have to be W-2 employees. So if you're only employing 1099s, that doesn't work. Healthcare, it's really what we say is frontline, high turnover industries where people make things, move things, or directly serve people.
Is the most common incentive that shocks people the most in addition to this hiring incentive we're talking about right now?
I think the it's so interesting what people know and don't know. There's just an alphabet soup of these things. But when you're hiring from, let's say foster youth, which is a great talent pool because these are, young people who've been mistreated by the system. They're grateful for an opportunity. As long as you understand the background they're coming from, like this is a great, great workforce pool. They're eligible also to have their first set of work appropriate clothes paid for, their tools paid for. Now there's some paperwork to that, but man, you get to show up on site with new boots and clothes and your first set of tools because we've helped arrange that for the employer. That's super surprising to people. It's surprising to people that veterans are eligible for these tax credits. I'm like, well, who doesn't want to hire a veteran? Everyone wants to hire veterans. That's fantastic. But there's not necessarily a great pipeline from folks getting out of service on active duty to those jobs. And so that's the piece where if you recognize, well, if I'm intentional about this hiring, I get this talent pool. And then what we found is often, like people employing people with recent felony convictions are shocked at how great those employees are because they want to stay in those jobs. Yeah.
That that makes perfect sense. Why would you say that traditional, like, CPA firms or even HR firms don't find these opportunities? Is it economics, incentives, bandwidth? Why don't other companies do what you're doing?
All of the above. It's usually thinking about the ROI for the decision makers. It's money coming in. So CFOs get it. I mean, my demos are 23 minutes long. Like they get it. They're like, great. Is it really just like that? Okay, HR, go do this. But they weren't aware of them, or previously to, we take 10% of the tax credits that we generate for people. That's our revenue model. Even if you got 100%, but you have to spend a bunch of time and again, fear, right? Am I going to get audited? What's that going to look like? What if I fill this out wrong? That's the part that the financial piece is one piece, but really we give people the confidence to say, oh, great, I can do this.
Yeah, this is why the future of accounting, my world, isn't bookkeeping, it's intelligence, it's knowledge, because AI very quickly is taking a lot of people's jobs. Bookkeeping is going to be one of them. I know that's going to happen. So for those who call themselves CFOs, in the traditional sense, the days of doing all the tactical grunt work are going to come slowly to a halt, probably. That's why strategy is so important. I like to say that CFO stands for not just chief financial officer, but cash flow optimization, looking for those opportunities to increase cash flow, reduce expenses. And what we're talking about right here is just one of those opportunities where it's a tax incentive that directly affects the bottom line in significant ways. For most companies, their labor force is their biggest expense. If you can save them a ton of money up front when they hire, that's a no-brainer. So I love this
I've heard you
this kind
talk
of
about this
stuff.
before, and I think that's the sort of the inverse of the fear piece. Part of what you provide is the confidence, right? Like, I think I understand this. I put it in chat, and chat said this, but that human bit, like every second you spend bookkeeping is not a great use of your time. Every second you spend making me confident that I'm doing everything that I can to make my business successful, that's a great use of your time and my money.
Yeah, absolutely. Is there ever a line between, we'll say, smart tax planning and aggressive tax positioning from what what we're talking about here? Or is there any gray area?
For us, there's no gray area. You either qualify or you don't. There's no, we don't mess around with anything. It's really just, and we don't, and we deliberately stay away from anything like grants or applications for anything. Or check these boxes, get this money. That's what we do.
Yeah, these are government created programs designed to influence specific behavior by the workforce, which ultimately benefits the economy. A lot of people don't understand that why the tax system is structured the way it is, or the way it's supposed to be structured, is to incentivize certain behaviors. And so having a healthy workforce, people working, that's good for the country and the
Yep.
economy.
Bipartisanly supported. That's great. Danny, I know we're out of time here. Thanks so much, man. This has been great.
Yeah, thank you so much, Ben, for your time and sharing all this knowledge. I'll be sure to share your website in the link below for business owners that want to learn more. Be sure to like and comment, and we'll see you all in the next one.